Hello everybody. In this video we are going to discuss about India 20. What is there in India 20? Accounting for government grant and disclosure of government assistance. This is relating to India 20. Now we should know about the government grant and we should know about the government assistance and what we need to disclose here. Firstly, government grant means what? Here the government grant means by government in the form of transfer of resources of an entity. It will assistance. So what here the government will do? Government will assistant in the form of transferring of resources to entity. It is sending some amounts. So how we can that we sending the amount and how the entity going to recognize that amount, that is the main here. Here entity shall recognize this government grants in books only when there is reasonable assurance is there. Here reasonable assurance for receipt and compliance means the entity will comply with conditions of the grant, whatever the conditions is there, if any, then the entity will have reasonable assurance to comply that conditions, and the grant will be received then and only I need to recognize it. So here receipt means grant will be received, compliance means entity will comply with conditions of grant if any there. Now how we can account this grants? Accounting of government grant related to assets. Here the assets we are receiving the grant. Now how we can recognize the government grant of assets? How we can present? Firstly, it means grant given by government to entity. Why the reason will be the grant will be to purchase or to construct of long-term assets. For example, if entity establishing one machinery, if entity establishing one establishing or setting one plant, purchasing or developing some equipment or machinery and land to start the business. For starting the business, it is incurring some amount establishment. Then the government is giving some amount to help that entity to purchase of that land or purchase of that plant and machinery, etc., etc. Now accounting of monetary government grants related to asset. When entity is receiving, if the amount is receiving, it is monetary item, if it is monetary item, and when grant is receivable in cash, entity has two options for accounting of this type of government grants. So if it is not a non-monetary, means if it is a monetary, then the entity will have two options for the related, because it is relating to asset. Now first one will be the entity deduct the amount of government grant received from cost of assets. So we can deduct the grant arriving at carrying amount of asset. So we can deduct the amount of grant received for cost of asset. Then what will be the entry? We need to deduct the amount. So whenever we are deducting, asset will decrease, means asset will credit. What will be the debit? Receivable account debit into debit. Okay, this is option 1. Or we have another option also. Another option will be, if grant is related to depreciable asset, if grant is related to depreciable assets, we can if the grant is receivable for depreciable asset, then the grant, recognized grant, if it is relating to depreciable assets, the grant, whatever the grant we are receiving, deferred income in balance sheet. So we can defer it in balance sheet and transfer it to profit and loss account in the ratio of depreciation over the useful life of the asset. So whenever the asset, if it is related to depreciable asset, then the depreciable asset, whatever the balance we are receiving and transfer it to P&L in the ratio of depreciation of useful life. Then the entry will be whatever the grant receivable account debit to deferred grant. So deferred grant will be presented. Or if grant is related to non-depreciable assets, when grant is related to non-depreciable, for example it will be land. So land means we have two options for the land. Whenever the grant related conditions was satisfied, or whenever the grant does not have any conditions, if grant does not have any conditions, we can recognize the grant immediately in profit and loss account whatever the amount we are received as income. Then the general entry will be government grant receivable, or if you received bank account debit to grant income will be thrown in profit and loss account. Or if grant has some conditions, some obligations of the entry is there, recognize the grant as deferred income in the balance sheet. So we need to recognize as deferred income in balance sheet and transfer it to P&L in the ratio of the obligation over the period of conditions. So if you have conditions, we need to recognize firstly in deferred income as in balance sheet. After that we need to transfer the profit and loss account in ratio basis. Then the entry will be same, government receivable or bank account debit to deferred grant. Here deferred grant. Now it is related to assets and incomes. Whenever we are receiving government grant non-monetary basis, means accounting of non-monetary government grants related to assets, that is when government grant is received in kind. Here entity was received grant in non-monetary. Now also the entity has two options. One option will be recognize the asset received at nominal value, so we can recognize that nominal value. And another option will be if the asset will be depreciable asset, or if the asset received is grant is non-depreciable assets. So firstly the nominal value conditions. So here the nominal value means here nominal value of that entity has paid to government to acquire the asset. If asset is received for free of government, then nominal value will be 1 rupee or 10 rupees or 100 rupees, it will be nominal value. If any amount paid to acquire that asset, then that will be nominal value. The entry will be asset account debit to bank account. Asset account debit to bank account. We are receiving the asset and we are paying the amount will be 100 rupees nominal value. We are booking the entry. Now whenever same non-monetary asset, if that asset received is non-depreciable, if asset received is relating to non-depreciable, that is example land, then we need to see that grant is there any conditional or unconditional. If this land have any conditional or unconditional, if it is unconditional, directly recognize the asset at fair value and recognize the grant at fair value immediately in profit and loss account, that is asset account debit to government grant income. This is P&L, this is balance sheet. Whenever the grant is attached to some conditions, that is some obligation on entity, then we need to recognize the asset at fair value. So at fair value we need to recognize that fair value and recognize the grant at fair value has deferred income in balance sheet. So deferred income in balance sheet and transfer it to P&L in the ratio of obligation over the period of conditions. So over a period you need to transfer the amount. This is relating to non-monetary items. If non-monetary asset is depreciable asset, then the amount, whatever the amount we are received, we need to recognize the asset at fair value and recognize the grant has a deferred income in balance sheet and transfer it to PNL over a period of depreciation, useful life of depreciation thing, like as this is related to government grant related to asset. Or now in some cases we will receive the grant related to incomes. Now accounting for government grant related to income, it means grant given by government to entity for incurring expenses or to give some relief cases of losses in businesses. Like for example, Chennai is there. In Chennai, water floods was came. So to come out from that water floods, we need companies are giving companies taking care of that water floods person. Government giving some benefits. Example, immediate startups of business or relief measures or subsidies for staff training expenses or for research and development or incurring expenses to protect the environment or subsidy to sell goods at lower prices. These all will be provided. An entity shall do accounting for this type of government grants. How we can account the government grant of this related to incomes? Firstly, if grant is receivable for expenses already incurred or immediately start off or relief, that is we do not have any condition. So directly we have unconditional amount. Then recognize the grant immediately in profit and loss account as income. So directly other income will be shown, bank account debit to grant income, it will be shown in profit and loss account. Or if grant is received for future expenses, that has some conditionals. Now the entity recognize the government grant at deferred income in balance sheet and transfer it to profit and loss account in the ratio of related to future expenses over the period in which those expenses are incurred. So we need to deduct the reporting amount. Now we are explain that we have government grant, we can book into profit and loss account, balance sheet, and how we can present this, how we can account this government grant. So firstly, government grant, if it is relating to balance sheet, how we can show as a defer grant, and this defer grant will be has liability. Defer grant will be liability, and liability will be maybe current or it may be non-current, that is balance sheet. After that in PNL, so if we are going with profit and loss account, in profit and loss account we have two options for this items. One will be grant income is shown separately in other income, and second option will be grant income is deducted from the related expenses. We need to deduct the amount from related expenses. Next, after that statement, if we are showing how we can show in cash flow statement, grant received is shown in the financing activity. It will change the size of the entity. This is the main. Now some cases what we happen, government grant received, and government grant received, we need to refund that government grant. Then how the entity has to do accounting of repayment of government grant according to cases. If government was recognized directly in profit and loss account has income, so in previously whenever it received, it was directly transferred to profit and loss account. Now it immediately debit the profit and loss account. So whenever the received, they are transferred to PNL, means bank account debit to profit and loss account, they post the entry at the time of receive. Now we need to reverse the amount, we are refunding the amount. So profit and loss account, profit and loss account debit to bank. We need to put the entry. Now if the amount grant was recognized as deferred income, so whenever it is shown as deferred income, repayment of grant will be debited to deferred grant, and any remaining amount refund will be debited to profit and loss account. So we are at the time of receiving the grant, what we have done, we are transferred it to deferred grant. So deferred grant means it will be liability, as we are explained in balance sheet. It will be liability means credit balance. Now we are refunding means we are debit the amount, whatever the existing amount, deferred grant amount, we need to debit, and after that whatever the amount we are paying bank, so balancing figure will be transferred to profit and loss account. That is the case. Or some cases, if grant was recognized by way of deduction from the asset, cost of the asset, then repayment of grant will be debited to the asset. So what we are done here, we are debited to asset, deducted from the asset, means at the time of receive what we are done, bank account debit to asset. So decreasing of asset means creating the asset. Now we need to put the asset account debit to bank account. This is the alternatively. Now here the depreciation that would have been recognized on this asset if there were no grant shall be recognized in profit and loss account. Next, if we are received the amount, from the government, how we can receiving, it is like a loan, how we can account the loan received from the government, at we received at a less than market rate. Basically market is giving a 10%, but government will give at 6%. How we can account this entries below market rate? Now any financial liability, we will go with the Ind AS 109 will take care of this accounting. Now at initial recognition, whatever the difference between the loan amount received and fair value of loan, the amount difference between the loan amount received and fair value of loan, we need to see the difference, and the difference will be treated as government grant. The difference of government grant, this difference of government grant will be accounted as per Ind AS 20, that is according to nature of the grant, purpose of the loan. What we are discussing, if it is asset we need to deduct, or we can post it liability, government grant liability, or it is related to income, we need to charge to income, whatever the amount. So the entry will be, we are receiving the amount, so bank account will be debited to the loan, we are receiving the loan. So is the actual amount, here actual amount, loan will be fair value, and balancing figure will be deferred government grant. Whatever the balancing figure, we need to put the amount has deferred government grant we are received. This is Ind AS 20. Now we can see the summary of Ind AS 20. What we are started with Ind AS 20. Ind AS 20. Firstly, we are explained about the meaning and recognition. Government grant means simply it means the assistance by government in the form of transfer of some resources to entity. Now entity shall recognize government grant in books only when there is reasonable assurance is there. That reasonable assurance will be on receipt, and receivable on compliance will be there. Now accounting for government grant related to assets. So first related to asset, we are started with assets. It means grant given by government to entity for the purpose of purchasing or constructing, some examples. And accounting, how we can account the entities, if it is monetary grant or if it is non-monetary. Monetary means it has two options. One option will be deduct the asset from the grant received from the cost of asset. Option 2 will be we need to see that the asset will be depreciable or non-depreciable. If it is related to depreciable, we need to receive whatever the amount we are receiving, we need to debit and create the deferred grant, that is liability. And if it is related to non depreciable asset, then lands, then if there is any grant, that is the unconditional. If it is unconditional, directly bank account debit to profit and loss account. If it is having some conditions, and then we need to transfer this amount to deferred income in balance sheet and transfer it to profit and loss account in the ratio of whatever the obligations we are going. And after that we are talk about the grant related to non-monetary government grants. Here also we have two options. One option will be recognize the asset at received at nominal value, and if the grant is received to depreciable asset, then also recognize the asset at fair value and recognize the grant at fair value deferred income in balance sheet, transfer the profit and loss account in the ratio of depreciation over a useful life. And another option 2 will be if grant is non-depreciable, that is relating to land grant condition, we need to see that is there any conditional or unconditional. If it is unconditional, directly to profit. Then if it is have conditions and some obligations will be there, then we need to recognize the assets at a fair value, recognize the grant at fair value as deferred income in balance sheet, and transfer the profit and loss account in the ratio of whatever the obligation we are providing. Next, after we are discussed about the grant related to incomes. Grant related to income, it means grant given by government to entity for incurring or giving some reliefs or causes of losses in business. Now entity shall do account for this type of government grants. How if grant is receivable for expenses which already incurred or going to immediately start up or relief, so it is unconditional way. Then there is no conditions, then we need to recognize it immediately in profit and loss account, bank account debit to grant income. If the grant has receivable for future expenses, means they have some conditional expenses, then we need to recognize the grant as deferred income balance sheet and transfer it to profit and loss account in the ratio of related future expenses over the period in which those expenses are to be incurred. How we can present in the balance sheet? In balance sheet it will be shown balance sheet deferred grant will be liability will be current or non-current. And in profit and loss account we have two options. Option 1 will be grant income is shown separate in other income. Option 2 will be grant income deducted from the related expenses. And after that, cash flow statement. In cash flow statement it will be shown in financing activity. And after that, entity has to do accounting for repayment of government grant. Sometimes it need to repay the amount. So whenever government is repaying the government grant, if it is related to incomes or if it is related to assets, if it is related to incomes, if grant is recognized directly in profit and loss account whenever we receive, now we need to post the reversal entry, profit and loss account debit to bank account. If grant is recognized as deferred income, means we are shown in the balance sheet, then whatever the amount existing in the balance sheet, that will be debited because it is liability, and whatever the amount we are paying, it will be created, and remaining balancing figure will be the profit and loss account. And after that, if grant was recognized by way of deducting from cost of assets, so if we are ready from the cost, now we need to add that asset. So whenever received amount we are deducted means we are created the asset and debited the bank account. Now we are refunding the amount, so now asset account debit to bank account. Next, when we are receiving amount as a loan, and that loan will be at below market rate, applying the financial liability that will be accounted as per Ind AS 109. At initial recognition, what is the difference between the loan amount received and fair value of loan will be treated as government grant. So we need to see the difference between the both values, and the difference of that both value will be treated as government grant. And the entry will be bank account debit to loan account to deferred grant amount will be the balancing figure. This is Ind AS 20 government grant and disclosure, accounting for government grant and disclosure of government assistance.